Hello and a warm welcome from Frankfurt. This is the quarterly update on the Euro primary markets from Helaba. I have here with me again Matthias Mems, our head of DCM and Syndicate.
Hi, Matthias.
My name is Thomas Groß. I'm in charge of financial institutions in general for Helaba. And yes, we have seen quite a bit of action in the financial institutions markets. There seems to have been sort of a shift in the main actors here from the all-beloved seniors to the newly beloved covered bonds. So, Matthias, why don't you give us a quick look back on the first quarter of 2022?
Yeah. So, we have seen extremely active Q1 for covered bonds this year, with roughly 80 billion euro in euro-denominated covered bonds. It was by far the strongest quarter of the last years. Of course, much higher issuance volume than the year 21 and 20 that were influenced by Corona and the TLTRO. And overall, we have to say that covered bonds have proved in the first quarter the function as a lifeline for financial institutions, especially when you have in mind the war in the Ukraine, where the market was more or less closed for around 2 weeks.
Amazing. And the main drivers for that, in your view?
Yeah, as mentioned, the market was closed for most asset classes, including seniors. It was also no activity for around 8 business days in covered bonds. And
that's the Ukraine effect.
That was exactly the Ukraine effect. And after the market opened again, we have seen a completely shift in maturities from up to 10 and above 10 to just up to 5 years.
Yeah, but Ukraine is still going on. So are we going to remain in crisis mode for the time being in covers?
We are in crisis mode, but we are not in crisis mode for covered bonds. That has shifted away end of the quarter a little bit. We still see again issuance activity at the longer end of the curve, 7 to 10 years. The deals are okay, recepted by the market, but what we can also say about the spread is that the spread is definitely some basis points higher than at the beginning of the year, which attracts, of course, some investors.
And at the same time, very subdued activity in seniors, I take it. Although we have seen some deals coming out over the last couple of days, right?
There were some deals in the senior format, but just coming back to covereds, with this higher activity than expected in Q1 due to the non-foreseeable crisis, we have to increase our forecast a little bit from roughly 120 to 135, and that would mean a covered bond issuance year that is more or less in line with what we have seen before the crisis.
With one exception, we have more bonds coming from corners where we didn't have as many bonds before, right?
That's completely true. When you look at the single months, you can see that especially March was exceptional with 35, and exceptional in March was especially the issuance activity from our friends outside the European Economic Area, from Canada and from Australia, that have issued more bonds in a quarter that they have formerly issued in 1 year.
And more than the Germans and the French?
German and French have also issued more than the years before, but with around 15 billion each, just 5 billion more. So that was more or less a very good year for a very good quarter for German and French issuers, but not as good as the issuance activity from outside Europe.
So back to the good old days in this respect, yeah?
Hopefully.
And in terms of maturities, was that a broad bunch, or did we see certain focus areas when it comes to maturities?
So we have seen a clear issuance cliff with the Ukrainian war. Before the war, especially at the beginning of January, maturities were focused 10-year plus. We have seen a lot of activities, 15 years area. But before the Ukraine, the activity or the inflation data was harming the issuance activity at the long end of the curve, where investors stayed a little bit sideline and don't want to touch the market. So issuance was at the beginning of February more concentrated around 7 years, but with Ukraine we have seen a clear shift to maturities 3 to 5 years in an amount what we haven't seen for a really long time before.
And any particular new entrants in the covered bond market, issues that we haven't seen before?
Yeah, so far not. Issuers or the existing issuers are focusing of improving the program. We hear a lot behind the scenes that they work on green programs to improve that. And so far, the issuers that we have seen in the past were also active in the first quarter.
Okay, cool. Well, we love covered bonds, but there are also other bonds than that. So let's switch a little bit to the senior side of things. What happened here?
Yeah, so as mentioned before, also the influence of rising interest rates, rising spread and rising volatility because of the Ukraine conflict is visible here. With just 19 billion issuance activity in the senior pref euro market, we see that this first quarter was not as active as the quarters just before. So overall, we think that we can reach an issuance volume around around 60 billion in senior pref format, but that is below average, I would say.
Okay, but that's preferred. What about non-preferred?
Non-preferred is the year so far that is more or less in line with 40 billion in issuance activity and with no special patterns that we can see here. We expect an issuance activity for the whole year somewhere around 80 billion. That is a little bit 10% higher than our forecast at the beginning of the year.
So if you say you're about to raise your forecast for the overall volumes for covereds to about 140-ish, and we get 80 and 60 here in the senior bracket, that means covereds and senior will roughly have a balanced output for the rest of the year.
That's something that we haven't seen for a long time.
Keeps us busy, good. What about the highest end of quality, basically the SSA sector?
Yeah, with 125 billion, not surprisingly, the EU with the next gen and some sure issuance were again the most active issuers, talking about roughly 30 billion in the market or one quarter of the overall issuance volume. And on the first look, it seems like a pretty normal year in comparison to the years before. But when you dig a little bit deeper, we have a special pattern in Germany here.
Which is?
Which is lower issuance activity from the German lender side with just 11 billion. That is nearly only half of that we've seen in the first quarter 21. That has, from our perspective, we have two reasons for that.
And that is even before the Schuldenbremse is going to be reenacted again.
Exactly.
Amazing. Exactly.
So first of all, we have a bulk of a maturity more in the second half of the year. So that we think we get these issuance activities that we expected for the lenders more or less in the second half. On the other hand, the tax income is much higher than predicted. So
even though we're talking about the recession, that's quite amazing. Yeah,
we're talking about recession, but when you look at the figures, we are not in a recession yet.
At least when it comes to the taxman. Yeah, I guess the taxman is never in a recession. But okay, thank you very much for the summary of the activities that we've seen and the ones you expect, but maybe a little focus on potential volatility drivers. It's not going to be smooth sailing, is it?
Unfortunately, it's not. We still have the war in Ukraine, where potential escalation could lead to higher volatility. We have a discussion in the European Union and within the G7 countries about strengthening the sanctions against Russia, that especially a boycott in natural gas could lead to a really deep recession, at least in the European Union. We still have discussions that we get a little bit more rate hikes, not only in the EU, in the Eurozone, but also in the US than expected. We're talking about potential changes in the APP. Just want to remember that the ECB want to stop net buying shortly before the first rate hike. And overall, we have at the moment in many jurisdictions the higher inflation data for years, what could also harm further issuance activity, what could lead to further spread volatility.
Well, I guess everybody who has a car or needs to heat a house can really say something about that.
Definitely.
So, okay, not only the good old days are coming back, but some of the bad old days as well. Thank you very much, Matthias, for your valuable insights.
It was a pleasure.
And a big thank you also to our audience for tuning in again. The next webcast we're going to do on the primary markets will be in roughly 3 months. Until then, stay safe and enjoy the Easter break. Thank you very much. Bye-bye.
Bye-bye.